Hi there, Serial Trader here. Let's have a look at crude oil. It's been a little while since I've had a look at this one. So I was waiting for some clarity on this. We had this very almost blow-off looking advance here. And we peaked out 75.24 here, so above $75. And at that point, things were looking extremely overheated. And I thought, well, okay, that could be a significant top. But let's see how the decline looks before getting too bearish. And I was going to see if we could actually break this higher low pattern on the daily chart. And that would have been going below 63.62. So again, we've set another higher low at 64.45. So we haven't broken that higher low pattern. And actually the decline looks corrective. It looks like it's just a simple three-wave move down, ABC down. Now, if you've been following any of my videos, you know how that typically goes. So a simple three-wave decline. We've, let's see here. We failed to make a lower low on the daily here. And this is very much contained within this parallel trend channel, and actually we've broken out of that quite nicely. And also you can see, just doing a little slope analysis, so here's the slope of the initial decline, and then here's the comparison to the slope of the second decline after that corrective bounce. And you can see this is far shallower, and actually we found support right on the median line of this channel. So very, very indicative of just a ABC down. Very corrective looking. And I'll just go ahead and label that as such. So just a simple ABC down. And now we're coming out of that. So I would say very likely we have the low in place here at 64 and change. And now we're heading up to inevitably get above the previous high at 75 and change. So just to get an idea, we'll do a reverse fib, and we'll do our typical 1.382 and 2.0 objectives. And okay, so that comes in at 79.36, so let's just call it 79 at the 1.382 objective, and then the 2.0 multiple will be 86, so a little less likely, but still possible. So we definitely put some pressure on $80 here on this next move up that I'm anticipating. And this just looks like just another textbook three-wave decline, just like I've pointed out recently on BABA, and then before that canopy growth. It's just the exact same pattern. You just have this nice ABC down, right? And also just to do some fib relationships between A and C, just to add some more credibility to this pattern. So A off of B, we'll do some objectives there, the 618 and the 1.0. And what do we get? Looks like we basically found support right around that 618 relationship between A and C. Didn't get down to that equality relationship, so I can take that away. And again, just finding that nice reaction off that median line coming out of the channel quite strongly. Also seeing that bullish MACD cross here on the daily. And if you look back, that bullish MACD cross has had some great follow through previously here. And also over here, you know, led to quite a nice move here as well. So crude looking bullish once again. Again, I just wanted to wait for some clarity before touching on it. Well, it looks like we got our clarity. So heading over to the candlestick chart, similar channel drawn here, but just with the candlesticks. We've gotten well above the T line and the 3T line. We're breaking some of these short-term resistance levels we had, and obviously breaking out of this channel quite nicely. Also, this 200-day simple moving average, look at that. We just basically bounced off of that perfectly. And the 50-day moving average is still well above the 200-day moving average, still aligned for bullish action. And we're also above this 20-day simple moving average now. So everything Overall, looking likely for continuation of the upside, and again, looking to take out this high and then some. All right, so just on the other chart here, the bar chart, you can see, okay, well, we've got the MACD bull cross here, as was shown on the other chart. We also have a nice stochastic cross here, and this is a different stochastic setting than I use on the candlestick chart, but nonetheless still effective. And you can see stochastics on this setting has been quite reliable once it's crossed over. It's led to some pretty good moves. So yeah, it's all aligned for bullish continuation. So how am I playing this? Well, I'm playing it with CL contracts. And due to the leverage I'm using, I typically don't hold too many of them overnight, maybe 3 or so overnight if I want to carry the position. And then during the day, I'll join in on some moves with a larger contract size. But if you do just want to take kind of a positional long, you could just buy an appropriate number of them, or even just one contract, and throw your stop just below the low here, which was 64.43 on this October contract. And then obviously looking for a move, eventually past the highs there. So we'll continue to watch crude. Looks like we're back in the bullish trend. Should be interesting how it plays out. All right, Serial Trader signing off.